Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Andrew Wolfson and Alicia Taylor to talk about the Pembroke VCT. Andrew, Alicia, welcome to the studio. The Pembroke VCT, what is it? What makes it different? And why should investors consider it?
Thank you, Jonathan. Thanks for having us back again. So bird's eye view of Pembroke VCT. We're now just over 10 years old. We have got 43 investments in our portfolio. We have just over 230 million under management. And although we've grown and evolved into what we are today, we remain true to our sort of founding ethos, which was one of let's find really great founders of UK businesses and let's give them the financial support and the strategic support that they need to be able to grow the businesses of the future.
And so taking a step back, for those who aren't familiar, could you give us some background to Pembroke Investment Managers and your roles there?
Yeah, certainly. So I think going back to when we founded Pembroke, it was founded by myself and Peter Dubins back in 2013. I'd been working for Peter for 4 years, looking after his private businesses. And we saw so much deal flow coming into his office that we needed a structured fund to take advantage of that. So we set up Pembroke very much to back young founders, entrepreneurial people who we believed had what it took to build businesses that were going to be of significant value. And we really look at businesses in the consumer sector, in digital services, and in business services.
And Alicia, your role?
Sure. So thank you very much for having me here today. I joined the investment team back in September 22. Prior to that, I started my career at Barclays in investing, but at the much larger end of the scale. And after some time, realised really that my passion was in the early stage of investment. So joined a venture capital fund in the UK, focused on technology-enabled investments. And then September 22, moved across to join Andrew and the team at Pembroke.
Very good. And you mentioned 3 sectors there, but what are you looking for specifically with the companies that you back?
Well, we're looking at them. We're looking to take them from small companies in their infancy to larger companies that want to be acquired by either private equity or strategic buyers. But ultimately, what we focus on is people. If we back the right people, in whatever sector you're in, if you back the right people, you have a chance of really making a success of the business. And one of the things we really do is we focus on those people, and we focus on how do we get really great people, how do we wrap great people around the founders and the management teams.
And I think just to add to that, we look for UK-based businesses, typically at the late seed to Series A stage. The founders, as Andrew mentioned, is a really important point and a really big focus of our due diligence process. We're looking for those founders that we believe truly to be exceptional, so ambitious, driven, show that they can be agile and adapt to market needs. And in terms of underlying business model, we're looking for strong unit economics in a big market, and we're looking to fund, as Andrew says, that next phase of growth.
And being known as a bit of a sector specialist, perhaps with a premium consumer slant, does that come with any advantages?
So I think we're quite bullish on the consumer, and I think the consumer has been given a rough time by the media. And brands that we've backed, we've seen, although they've had to evolve their businesses to suit a modern day consumer and, to go through the hardships, let's face it, over the last 4 years, they've been pretty tough trading times. But most of our businesses in our consumer sector have managed to increase revenue year on year and lengthen cash runway. So it's about backing people and teams who really understand how to build a business, and that those unit economics that drive the business are right. The one thing that we've really stayed away from, which I think is really important, is businesses that are raising money at valuations that are driven by investor sentiment rather than the underlying business model. So, backing a unicorn when it's doing 20 million of revenue really, in my mind, is not a unicorn. There is a reason that unicorns are hard to find. They're sort of mythical creatures. we really set out to back businesses that we can take from where they are at the point we back to doing 100 million of revenue. That would be real success. And that's really what we strive to do. And we think consumer plays a big part of that. And when you look at when we look at digital and we look at business services, even business services, the businesses we back ultimately deal with the consumer as well. So although the company that we might back may sign long-term sticky contracts with other businesses, ultimately the consumer, and we'll go on to a few examples later, ultimately the consumer is at really the heart of everything.
So do you have any examples of companies you've backed in the portfolio more recently?
Absolutely. So our most recent investment was a company called With Nothing Underneath, or WNU. And WNU was founded by Pip, who previously worked within high fashion magazines as a stylist and within editorial. And she saw a real gap in the market for a shirting brand tailored specifically to women that really met the needs of the modern consumer. So was timeless, was versatile, but had sustainability at its core. Now, what the business has achieved since inception, we think has been remarkable. On almost negligible funding, the company's remained profitable, has triple-digit growth in 2023, and continues to go from strength to strength. So it's within a sector that Pembroke knows very well, and we see a number of growth levers both in the UK and internationally for the business. So it's one we're really excited about.
And Andrew, any examples?
Yes, another one we've recently invested in is called Transreport. That was set up by a founder called Jay Shen, who actually did a PhD when he was at university on travel for people with mobility issues, and realized it was such a problem that he set about setting up a business, because he realized that it was the world that we live in that defines people's disability, not their own inability to do things. So he set about changing that and built a platform that allows the major train operating companies, the car service providers, the airport operating companies, to be able to deal with the movement of people who have mobility issues. So when someone wants to travel, it's no longer a case of, no, sorry, we can't accommodate you. Actually, there's this platform now that makes it much more seamless for anyone who is either aged or has disability, who finds it difficult to get from A to B, to be able to do that so that they can see the wonderful things that the world has to offer.
And so how do you find these deals? And then perhaps more importantly, once you've found them, how do you then win these deals? And is there anything about Pembroke that gives you an advantage? Yeah,
so actually With Nothing Underneath is a great example of this. I think Andrew and Peter, over the 11 years that the fund has been established, have built a really impressive network of operators that have done it before, but also advisors and people within our network that are consistently looking at the market. So With Nothing Underneath came to us actually from a financial director that worked in an old portfolio company we had. He introduced the business to us back in January this year. So it was 10 months plus really of us getting to know the founder, understanding the business. And because we developed that relationship, we were able to win the deal. And when the company did come to raise, we were well positioned. We had high conviction in the investment. And the founder was sure that we were the right fit for her, as well as the company being the right fit for our investment portfolio. So alongside our network, we use a number of traditional methods for deal sourcing. So we use market mapping. We'll look at the market and a particular sector and a niche within that, and look at the businesses within the UK we think are doing that really well. So that's our outbound approach. We'll also receive a lot of deal flow as inbound. I mentioned our network and advisors. We also work with a number of corporate finance houses, so receive a lot of deal flow that way.
I think also, the other thing we do, which I think is hugely important, is that we see a lot of opportunities of businesses that are probably too early stage for us to invest in, and we know that when we receive them. But if we like the trajectory that the company's on, we will see those businesses at an early stage, we'll keep in touch with the founder, we'll nurture them, give them some advice along the way, so that actually when they do come to market, they come straight to us rather than go out in a more public way.
Do you feel like you're becoming more of a destination now? Are you becoming more known in the market as sort of the go-to place for some
I think we're certainly becoming more known in the market, which is why our deal flow has increased. When we get a PR release in the press, we obviously get a lot of inbounds from that when we make an investment. WNU was a recent one where we then got a lot of interest from potential investee companies approaching us. So it all sort of works in the same ecosystem. The more deals you do, the more deals you exit, the more deals you're going to get coming in at the bottom.
So turning back to the portfolio and looking at some of the more established holdings, any particular highlights there? Maybe Lyma Life? Or...
Well, I've got lots. It's like asking me which my favourite child is. Not going to tell you that. So we've got Lyma, as you rightly suggest, where Lucy, the founder there, Lucy's got a fantastic story. She became very ill shortly after having her first child, contracted septicemia and couldn't get better, whatever medication she was given. She'd seen specialists. And she then got taken to someone called Dr. Paul Clayton, who is a professional of nutrition. And he turned around and said, "You're taking everything wrong. All this stuff you're taking, your body can't absorb it. I'm going to give you these 3 things. Take them." 10 days later, she was fine. And she thought then, she worked in the travel industry for a travel magazine. She thought then, I've got to take what he's got in his mind and I've got to package that in a way that the consumer can benefit out of a vitamin pill. That's now evolved into a laser and a skincare product. And she's really at the forefront of delivering, phenomenal at-home beauty treatments. She recently was won the Ernst & Young Entrepreneur of the Year award for scale-up company. So we back these people who she had a tiny business when we backed them, and in fact had approached most of the VCT industry looking for investment, and they all came back with come back later, which a lot of people do. We saw something in her that we thought was worth backing, and we've been proven right so far.
Very good. Any other examples?
Yeah, so another of our portfolio companies is Secret Food Tours. You may guess what they do from their name, but they run culinary tours across the world and help both locals and tourists to discover the hidden gems of that city. Now, it's a nice story because during COVID, obviously, as you can imagine, the market was really challenging for them. And in that time, we worked really closely with the founders to give them advice. And our advice was protect cash, reduce costs, and focus on the technology that they were building. As part of that, Pembroke was able to invest again, supported the founders and the investment proposition. And as COVID ended and the world emerged, the business that came back was in a much stronger position. So they were able to deploy the technology they built to allow them to scale and to access a global market and launch into new cities, really with minimal investment upfront. So that's one of our top performers. They've recently been listed in the Deloitte top 50 fastest growing technology companies. It's number 7. Yeah.
So to what extent do you get involved with some of these companies? I guess you can find a great entrepreneur, and do you just leave them to it, or do you help in some way as well?
I think the way to look at it is that we see every opportunity to work with a new business as a unique opportunity to work with a new founder and a new management team. And we really help them highlight the issues they've got in the businesses and the areas that we can help. And I think that's the sort of ecosystem in which we live in, is that we sort of encourage founders and management teams to pick up the phone to us when they've got a problem. We're not going to be overbearing. We don't run businesses, but what we do is provide them with hopefully the strategic help and advice that they need to be able to grow their business.
I think the overall message on this is there's no one size fits all, so we can scale up or down our support as much as the founder wants or needs at that particular time. I think, as we touched upon earlier, the network that Pembroke have built really from very early on in an investment decision can really move the dial for these early stage companies. So from speaking to operators that have done it before and can offer some advice and guidance, that really does make a difference to these early stage businesses. And I think with a portfolio of nearly 50 companies, our internal team are tracking management information on a monthly basis across financials and KPIs. So we've got that shared learning and that data we can then help our founders to see kind of current trends and to see within the market what might be going well or what is coming ahead in terms of challenges that they may face.
Very good. And it's been a reasonably quiet time for exits across venture capital as a whole. How's it been for your portfolio, and any green sheets perhaps on the horizon?
I think firstly it's important to go back to why has it been a hard time? And that hard time has been driven by lowered valuations, cost of living increases. So the whole market has been depressed from a valuation perspective. So all the good companies that may well have come to market have chosen not to, both from a fundraising perspective and from an exit perspective. What we're now seeing is we're seeing those green shoots that you talk about. We've got 3 of our portfolio companies that are in a process where they're being courted by corporate finance advisors and looking at strategic investors and private equity houses. So I think we're seeing early signs that the market is changing. What that looks like going into next year, I don't have a crystal ball, but at the moment the early signs are good.
Very good. And turning to risks, how risky would you describe your VCT? I guess you said you don't back the very high growth, high valuation businesses, but how would you describe it?
I think the risk, funnily enough, is not in those high growth, high valuation businesses. The risk is in the underlying business model. At what point does a business become profitable? And I think over the last few years, people have forgotten to some extent about profit and just driven sales. And that comes to an end if you're permanently having to use your investors' money to fund sales growth. So I think there's certainly been a realignment as to what other funds are looking for. The high growth opportunities where spend at all cost has now disappeared. So although it's still risky because they're early stage businesses, and statistically you're more likely not to succeed than to succeed, if you back the right founders and you give them the right amount of funding and put the right amount of people around them, you somewhat de-risk that process. And that's really what we're about.
Yeah, I think it's just worth adding to that. We don't invest in anything that is pre-revenue, that inherently it does carry more risk. And I think our due diligence process we take incredibly seriously. So there's a number of work streams that applies to, and it's financial, commercial, team, legal and technology, to name a few. But that's a process we take really seriously, and it means we can sometimes be quite picky in those investments we choose to progress with, but it's a part of our process of managing risk. And I mentioned earlier the way we manage monthly management information. So we have a dedicated portfolio reporting and monitoring team, and what they will do is look at that data that's coming in on a monthly basis and map out trends. So what does the cash look like, particularly cash runway, and can we forecast that going forward? If it's something that needs corrective action, we can look to be proactive and help the management team in that.
Very good. And we touched on the current environment a little earlier. Previous couple of years have been more challenging. How are you finding investing in early stage businesses today? How's it changed?
Has it changed? I think the market really has come back. I think probably 2 years ago, we really saw deal flow down in terms of quality, but also quantity. If we fast forward to today, and we've really seen a change in the last 6 months, our pipeline in terms of quality is at an all-time high. So we have a number of deals in early due diligence that we're looking to progress, and we're really having to cherry pick and decide where we allocate resource. So yeah, that's at an all-time high, which is really encouraging.
I think also what's important to add to that is we've seen the type of entrepreneur that we've been backing change over the course of the last 10 years. And what we're seeing a lot more of now is people who have worked in an industry for 10, 15, 20 years. They understand the industry like the back of their hand. They know what the problem is and they know what the solution is. And then it becomes execution risk. But what these people are doing is they're leaving, sometimes in their 40s, they're leaving their business they've been with for 20 years, where they would have had a very comfortable life. And they're saying, actually, if I want to really make a difference in my life, I'm going to go and be an entrepreneur. So entrepreneurs are not anymore these sort of young people out of university who think they know everything. We're seeing some of those, but we're seeing people who have a deep understanding of the solution that they're building a problem for, or the problem they're building a solution for.
And so finally, to sum up then, Andrew and Alicia, for those that want to back a VCT this year, why should they back the Pembroke VCT?
Yeah, so I'll provide a few reasons, I guess. Firstly, Pembroke VCT provides investors with access to 43 portfolio companies, maturing portfolio companies across a wide range of sectors. So the portfolio is incredibly diversified. The second point, as I mentioned previously, is our deal flow, so our pipeline, is of the highest quality we've seen, and we're actually really having to select the best of the best in terms of what we take forward to our investment committee. And the final point I would mention is the Pembroke internal team. So over the last 2 years, really, we've made a number of changes to the team. We've really been working to build out our internal team and the support both we're able to provide to portfolio companies, but also to help us in deal execution, in due diligence, in financial management. So really, we think we're very well positioned as we go into 2025.
Andrew, would you like the final say?
No, I don't think there's anything to add.
I think that's pretty good.
I think Alicia has summed it up probably better than I could.
Well, Andrew, Alicia of Pembroke Investment Managers, thank you very much.
Thank you.
Thank you very much.
If you're watching on YouTube, please press like and subscribe to the channel for more.